Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, December 11th, and we did have CPI in pre-market, and it did come in line with expectations, but still above the Fed's target. So inflation is still rising, and it's still very sticky. And markets reacted mostly positively today. We did open SPY with a gap up back above the 35 EMA to near the top of the implied move on the day, which was 607. So we started right here around 606, took it to 607 and all the way to the top of the trading range at 608. And that was also the top of the implied move on Thursday's contract for PPI. And we did turn back into the trading range just underneath previous all-time highs. So definitely a really big day for SPY. You could see the 35 EMA is at the almost very top of the implied move, which is an extreme overbought signal. And down here you could see that we took it from oversold yesterday all the way up to overbought. And SPX, same thing over here. We opened with a gap up to right above the 35 EMA, and then from there we took it to the top of the trading range, a little bit outside of it, almost hit previous all-time highs, but turned back in, and we closed right at the very top of the trading range. So I'm going to switch it back to SPY for just a second. Here, if you did sell 607, 608 bear call spreads, those would have closed about break even. So you could see we closed at 607.46, which is about the midpoint between the two strikes. But in SPX, if you tried to do the same thing, it would not have worked. We did close outside of that spread, and if you did take 60.85, 60.95, that would have worked, but we did close too far out in SPX. So for my strategy, the way I trade, this move was too big today and would have resulted in a loss. I did not trade SPX today, but the way I normally trade it would not have worked today. The move was just too big. And SPY closed up 0.77%, SPX closed up 0.82%, VIX came down 4.37%, and we did not stay within the implied move today. And QQQ had an insane day. I did actually trade QQQ, and it did not go my way at all today. And it took me a while to realize why we had such a big move. And IXIC, which is the Nasdaq Composite, did hit 20,000 for the first time. And that was absolutely the target today. And I did miss that. I don't normally track the Nasdaq Composite. I just look at QQQ. But that 20,000 target, what did take us above previous all-time highs and all the way up to 530.61 is the new high. So we opened QQQ with a gap up. And remember, the previous day we did close right on top of this up gap from last week. So we gapped up after CPI, and this is an awesome example of what happens when you gap completely over the implied move to open. So I do bring this up pretty often, and 99% of the time it does happen if we gap over the top of the implied move. So the top of the implied move is 525. We actually opened 525.08. What tends to happen is we squeeze for the rest of the day. And you could see that we had a move that was about twice the implied move. And that's because on a move that big at open, shorts are forced to cover down here, and that just pushes straight up. And of course, we also had that Nasdaq Composite target of 20,000. And this is also pretty wild. The 35 EMA, we did see a push there all the way above the top of the implied move, extremely overbought. QQQ did close up a huge 1.79%. The implied move on the day was just 0.86%, so that is a more than double move. VXN closed down 4%, and we did not even touch the implied move today. IWM, this is the other one that I traded today, and IWM did open with a gap up, and we took it in between the 30-minute 200 moving average and 35 EMA. Initially, that was resistance. We came back down and closed the morning gap, and once that gap was closed, we swung back up. And I'm going to take price out for just a second because this is something I talk about pretty often, where when the 35 EMA consolidates back down to the 30-minute 200 moving average, we are now at a very critical level. It did not cross down, it did not bounce, but we are right there at the 30-minute 200 moving average. So after bouncing here on the election gap and the 30-minute 200 moving average, we did have that huge push up. This is where we did see those all-time highs, first all-time highs in 3 years. And then this 35 EMA consolidated back to the 30-minute 200 moving average. So we could bounce here and stay bullish, or we could cross this down and become bearish in IWM. So we did bounce after closing that gap, and then we closed underneath the 30-minute 200 moving average. So since coming down to the 30-minute 200 moving average, we have been chopping around that level, very similar to right here. What caught us here was the 1 hour 200 moving average, and that is right underneath us. And IWM did close up 0.45%. RVX down 1.90%, and we did stay completely within the implied move here. And DIA, lastly, we have DIA. We did have another down day in DIA, down 0.27%, and from the start of the week, we have been trading underneath the 35 EMA on the 30-minute time frame. So we opened the week, we dropped down to the 30-minute 200 moving average, came up, saw the 35 EMA as resistance, and here is another example of the 35 EMA coming down to the 30-minute 200 moving average. Really important level. Last time that happened, or where it did get pretty close right here, was after we did gap up after the election. We pushed up, and then when we came back down, watch this 35 EMA, it comes down, 30-minute 200 moving average right here, and we bounce on it. Another big rally and making lots of new all-time highs, and then 35 EMA pulls back to the 30-minute 200 moving average. That is an oversold signal. We also have another oversold signal on the weekly contract here. We are at the very bottom of the implied move, or very close to it for the week. So we could see a technical bounce right here. Now, what I personally want to see is a move lower. I want to see a move lower across the market. But from a non-biased technical perspective, this 35 EMA coming back to the 30-minute 200 moving average is a sufficient pullback. And DIA did close down 0.27%, and we did close within the implied move for the week. We still have 2 more days on this contract, and then we did close within the implied move on the day. All right, that was a recap of today. Tomorrow we do have PPI in pre-market, so let's go check out tomorrow's levels. All right, guys, so I am seriously pushing it with how close we are to market open, and I'm still working on the video, so let's just get right into it. Today's implied move in SPY is between 604 and 611, and that is from options. The 30-day average volatility takes that $2 wider in each direction, 602 to 613, and Friday's contract 603 to 612. And to the upside, we do have all-time highs. So we did make those last week on Friday, and that is at 609.07. So right between where we are, or where we closed yesterday, and between the top of the implied move, which is 611, 612 on Friday's contract. and then uncharted territory above that. And underneath us, 35 EMA. We did reclaim that level, and before that, the 35 EMA was a constant support for a little over 2 weeks, pretty much ever since Nvidia earnings, and then underneath that was the election gap. So 35 EMA is a really important level. It is today, that is at 606 at open, 606 and a half, and it is just underneath us. Bottom of the implied move, 604, 603 on Thursday's contract. Sorry, that's Friday's contract. Today's Thursday. And underneath all of that, 30-minute 200 moving average. I don't normally mention the bottom of the trading range. That's a 30-day average volatility, unless there's something that lines up with it, but we do have a support level right there. See support here and a little bit back here. So 602 with that 30-minute 200 moving average could be a support if we drop. And SPX, the implied move here today is between 60.55 and 61.10. So you could see from between yesterday and today, our trading range did come down a little bit, got a little bit smaller. Options are saying just a little bit under 0.5% move today. And the 30-day average volatility, 60.35 to 61.35, so around $20 wider in each direction. 60.45, 61.20 on Friday's contract. And here we do have all-time highs just above us, midway through the implied move here. We did make those last Friday, and 60.99.97, so just about 6100. 61.10 is the top of the implied move. 61.20 on Friday's contract. Underneath us, 35 EMA. 60.55 is the bottom of the implied move, and that is for today, and 60.45 on Friday's contract. 30-minute 200 moving average is in our trading range. That is a target for the next 2 days. And at the bottom of the trading range here, we have 60.35, and that does line up with a place where we bounced, and that was on Tuesday, right before CPI. And then again back here, that was on the 35 EMA. And QQQ, the implied move over here today is 526 to 534, and that is from options. And the 30-day average volatility is 522 to 537. That's about twice as wide, and we did have a pretty huge move yesterday, which is why that is so much bigger. And then we did have RVX, sorry, that's VXN, that's the Nasdaq Volatility Index is VXN, did come down 4%, which is why the implied move is smaller. So 30-day average is calculated from the chart, implied move calculated from options. And on Friday's contract, 523 to 535, and above us we do not have anything. This is uncharted territory. We did make new all-time highs yesterday. We broke 20,000 in IXIC, the Nasdaq Composite, so we don't have a bunch of resistance above us. Now we have futures are down, pre-market's down 0.43%, so that does take us into the red, right above previous resistance, which is, sorry, what am I saying? Right above the 35 EMA and the previous all-time high. So let's move that. So 35 EMA is underneath us, 526 bottom of the implied move. That would take us right above this gap from yesterday, but I didn't put that in. Let's add that. Now thinking back, I don't think I put it in SPY and SPX. We'll go back in just a second. So this up gap here from yesterday, this is the CPI gap, and that is at the very bottom of the trading range. And so 526, bottom of the implied move, 523 sits right on top of that gap. 522 is the bottom of the trading range, and that is right in the gap. Bottom of the gap is 520. And just underneath that, we have another bull gap on the 30-minute 200 moving average. So decent amount of support underneath us. Really wild under here. And let's look back really fast before moving on to IWM. Okay, yes, right here we have an up gap, and that goes over all the two strikes 604 and 603. That might make that a really nice strike if we drop into that gap, and then that 30-minute 200 moving average. So a decent amount down there to retest, possibly fill, and see as support. And SPX, let's put that gap into, and right here, and that does cover all three of the strikes we have down here. 605 or 6055 to 6045, that could be a good bull put spread right here with that 30-minute 200 moving average still pointing up, going through that gap. There's a decent amount there for a technical play. And okay, so now let's move on to IWM. And IWM, the implied move over here for today is between 235 to 241. That's from options. 30-day average volatility 234 to 243 and 234 to 242 on Friday's contract. So these two numbers are the same, rounded out to 204, 234. Sorry, I can't speak in the morning. So this one is rounded out from 234.80, so that is closer to 235. This 235 is closer to 234. So check out over here. These are the actual values. I always round out, or at least 95% of the time. But if it serves you better to not round out, like if you're buying premium rather than selling, you may want the strike that is actually gonna end up in the money more of the time. So always check out to the right. If you don't like my rounding, then do your own. And Friday's contract, 234 to 242. I think I said that already. To the upside, we have a really awesome 30-minute 200 moving average and a 35 EMA combo. We are at a critical level here. We did bring this 35 EMA all the way back to the 30-minute 200 moving average, consolidated down and sideways here to do that. And now we see if we bounce here or if we break it. And if we bounce 241, 242 on Friday's contract, that could be a spread on the day. Then if we break it, we have the 1 hour 200 moving average, which does line up with 235, 234. That could be a spread to the downside. I have been trading IWM a little bit more lately personally. I just like the way that we do stay in the implied move a lot more often, and that the volatility is in the 20s. And so IWM has been in my playbook a lot more. I'm really happy I started tracking it and then finally trading it. So then we do have a support right here, midway through the trading range, a little bit above the 1 hour 200 moving average, and the bottom of the implied move, that's at 236. So one strike up from the bottom of the implied move, and then at the very top here, we do have a resistance that's outside of this spread right here. So lastly, DIA. And DIA has had nothing but down days this week so far. We are at the bottom of the implied move for the week. We did fill this up gap from 2 weeks ago, which was very likely the target for the week. 442 was the bottom of the implied move, and we're sitting right above that. Of course, we can drop underneath that, but hitting the bottom like that is an oversold signal. It's one oversold signal of many. We also have another one right here. And we do have momentum that is facing up with this 30-minute 200 moving average and 1 hour 200 moving average. So this is a channel of momentum that we're entering right here with that 35 EMA as resistance also. So on the day, 439 to 446, and on the week, 442 to 452. So let's see if we can close within the implied move. I am going to start tracking the implied move on the week in all of the others. I haven't done that yet just because I haven't had a whole lot of time to, but I do think it's a valuable thing to get a read on during the weekend before trading and then have that number throughout the week. And that is something I'm going to be adding on soon. I'm not sure when, but you will know when I do it. And there you have it, guys. PPI is in 20 minutes. This video will probably be out a little bit after that, but the trading ranges are not going to change throughout the day. So once we open, this is going to be it. And have fun today. Trade safe. Make sure you take profits when you're up. I will see you guys either tonight or tomorrow morning. See you guys soon.